complex transactions across space and across time, like the system of exchanges that begins to emerge across different sections of the Mediterranean or between the Mediterranean and northwestern Europe, these demand some kind of careful and reliable way of accounting for costs, of accounting for profits, of knowing who sold what to who, how much it cost, and how much was owed to someone else, and when it was owed. All of that is very complicated. And the system of accounting that was used by most Europeans, including many European merchants, before about 1200 or 1300 AD, simply was not up to the task. Even beyond that basic level that I talked about, where one neighbor trades a cow for a cloth and it understands that there's going to be another exchange to balance the mental books, the memory books, a little further down the road. Even if you go beyond that, what most European merchants were doing before about 1200 or 1300 simply wasn't capable of accounting for all of these complex transactions. What most of them did, in fact, was to reckon accounts on an abacus, so a wooden frame with counters that move back and forth, and then to write down in Roman numerals the totals that they came up with, the total of the debt, the total of the sale, et cetera, et cetera, et cetera. This simply didn't do the job. There were two problems with it. First of all, there was not a written record of the transaction that could be clearly followed and which would clearly say what, if anything, needed to be done to complete the transaction. If money needs to be paid at a later date, that needs to be recorded somehow. Secondly, without a zero, it was simply very, very difficult to actually do the kind of math that was required by these more complex transactions, whether we're talking about multiplication or division or percentages, which get introduced once you have a real or implied interest rate. So another set of ideas that also come from the contact between Western Europe and the Middle East becomes very, very important over the years after 1200. The first is the introduction of the zero, which we believe was created as a concept in India. And it starts to make its way into Western thinking about mathematics around 1200 or 1300. And at first, the Catholic Church actually tries to suppress the idea of the zero, which it associates with magic and with the practices of infidels. But magic or not, the zero finds its place in Western mathematics and becomes very important to the way, in particular, that merchants reckon sums. The second thing that happens is the creation of a system that we now know as double entry bookkeeping. And this records for every transaction a debit and a credit and a set of account books, which change in their formation over time, but their modern formulation was probably codified most clearly and most importantly by an Italian monk named Luca Pacioli, who happened to be Leonardo da Vinci's math teacher, in the late 1400s. And this system of Italian or double entry bookkeeping was then spread throughout Europe by another invention, the printing press, which is created in 1453. So by the early 1500s, not only has the system of double entry bookkeeping armed with the concept of the zero revolutionized the way that Western Europeans are thinking about accounting for profit and loss. It's begun to actually shape the way in which Western Europeans build their businesses and imagine the future of their businesses. So let's talk about that for a second. If we dig down a little further into what Pacioli and other popularizers of double entry bookkeeping advise people to do, we can see some core concepts that are still important in Western business practices starting to emerge. The first is the concept that every business association is, whether it's a business association that's simply a one-person business, whether it's a multi-person partnership, but every such association is characterized and measured by its set of books, by the set of books that record its credits and its debits. every year, if not more often, Pacioli advised, those partners should get together, whether in person or through their intermediaries, and they should go over the books together. They should reckon the books, and they should see if the books balance, to see if every credit matches up with a debit. Now, this introduces, if you will, the profession of bookkeeping and makes it important to have people who are trained and who specialize in that kind of process. And it also introduces the idea that we can keep a running scorecard of how businesses are doing. We're not going to measure ourselves just by whether or not we've been able to take some money out of the till or take some money after each trade and buy some nice things and give enough food to our family for them to live well and so on and so forth. We're going to actually have a numerical measure of how we're doing. And that measure is calculated in various ways, but ultimately it's the percentage by which the equity, the amount of capital for the firm as a whole, or the amount, if we look just at a particular trade, the amount of increase in equity, if we look just at or amount of capital increase that we see if we look at just a particular trade, the amount by which that has increased, and we call that profit. Of course, we know that it's possible to cook the books. We know that as trades get more and more complex, it's possible for calculations to be erroneous, for concepts to simply be wrong, or for people to cheat and to steal money, especially if they're in league with a bookkeeper. All of these things are possible. But on the positive side, bookkeeping based on the Italian system, the double entry system, makes something much more important possible. And that is the ability to understand what is going on, a way to measure all of the complex trades which were now possible with long-distance trade, with bills of exchange, with increasing efficiency, with broadening markets. Double entry bookkeeping made it possible for capitalists, as they emerged, to look at their books, to look at their accounts and see how they were doing, to see what the score is. And that in turn creates a measurable set of incentives for them to pursue, as it turned out, without pausing.